Hey traders, welcome to Charts and Coffee. Happy Thursday, everyone. Hope everyone's doing well. We have a lot going on this morning in terms of, well, you've probably already seen it in the volatility. And this is where I like to remind traders that if you're not already using some sort of, I've got my planner here. If you're not using some sort of process by which you are consistently tracking what's going on in the market in terms of those hot zones, those scheduled high impact, high volatility events, oftentimes it's just really twofold. One, you're missing out on potential opportunity if you've got the risk tolerance for it and the tools for it. And two, you're getting blindsided by movement that may not necessarily be something that was on your radar because, well, you didn't know that this, for example, the ECB was having a decision on rates. They did hike by 50 basis points, by the way. So they have a half point hike, I believe, that the market is digesting. Although we are not surprised, right? We know that the ECB, Christine Lagarde, have been preparing the markets for coming out of negative deposit rates in Europe and rate hikes. So we're getting the follow through and so the recalibration of that messaging. That's how hot zones work. If we know something's coming, we all make educated guesses about what's going to happen and the impact on the market. When the thing finally arrives and we have the number, whether it's earnings or non-farm payroll or a rate decision, now we try to understand, did we guess right or not? And the more that we missed on the guess, remember, the data never misses. The data is the data. We missed. I always find that perspective so interesting. Our guesstimate was wrong. So there's that quick adjustment. There's that volatility. The more in line our guess is with the actual result, the less volatility. Oftentimes, this is also considered the buy the rumor, sell the news psychology. In other words, we anticipate something, we react to that anticipation, and then if we're right, we take profit on the movement in our direction. So there's a lot of interesting things around psychology, and it seldom has to do with the number itself, really. Some of the biggest movement are going to be anticipation of that number and then reaction to our guessing wrong. Data is very misinterpreted oftentimes. And then, of course, you have the traders and investors and, of course, television that's going to get into a 20-minute dissertation as to the why. Gang, doesn't matter. What matters is not whether the data is right or wrong. That's not the game we play. It's how is it being reacted to. So when you look at something like this, you look at the price action today, you say, well, why is the market up? In a lot of ways, I've trained myself to kind of say, other than not knowing, other than the ignorance of not knowing what's on the calendar, the hot zones, after that, being aware, right, being informed, after that, who cares, right? Who cares? Because at the end of the day, unless I'm writing a check and the bank bounces, I've got to pay attention to that broader opinion. So there is a psychology to data. There's a psychology we should adapt when we are looking to trade data. Today on the NASDAQ, leading into the hot zones, neutral to bullish. I already have directional bias. If I'm neutral to bullish, then it's support levels, whether they be oversold stochastic levels, or if they be hourly price movement range, green support zones. That's going to be the priority. And we can do this across really any market. What is my directional bias going into the event? And then what levels can confirm that I have a setup and I have a reason to be in or out? Because just because we have directional bias doesn't mean we have a trade, right? Just because we have a potential target in mind doesn't mean that's a trade either. We have bias, and then adding to that bias is a setup. Adding to that setup is the price reaches our zone, and that's a trigger. And all those criteria have to be met, which is really important because if we can learn the reasons why we want to be in a market, we can also get very fluent, very proficient at probably the most important decision that we need to make as traders, which is, when do I not want to be in a market? When is flat the smartest position that I can have? And I think a lot of traders, if they considered 3 positions at all times, long, short, and flat, that third being so important, it would definitely take the pressure off what they think they have to do. Oh, there's a hot zone. I have to do something. You don't have to do anything, right? So anyway, hope that helps kind of bring you up to speed as to what I've been looking at so far this morning and the mindset that I've embraced when it comes to hot zones. But as always, gang, this show is about, well, it's about coffee and it's about your questions. So let's get to it. All right, first up, Kevin, can I please look at UUP for a long? Gladly. When it comes to UUP, this is the ETF for the US dollar. But remember, if you're a watcher of charts and coffee, you are more informed than the average trader. You know that UUP is never, ever just about the dollar. It's about the euro, the yen, and the pound sterling in that order, right? So as long as the US dollar is gaining against those 3, you have a viable long position you can consider in UUP. Of course, UUP, DX futures, FXE, and the 6E futures are all going to be in play because of the ECB, the European Central Bank event. Do I like the buy? I have at least a third 21 EMA propulsion lit up, and that's sitting at, you can see right there, about 28.5, 28.40. I really need to see that level. Do I have directional bias? It's bullish. Do I have a setup, the 21 EMA propulsion? Do I have price at that zone? In other words, is that pitch coming across the plate? How many of you have been to, I love this example. Probably some of you have heard me use this one before. You watch the little ones playing, first they're playing T-ball, and then they play that pitch where the coach is maybe 6 feet from them and gives them a nice gentle underhand pitch. And what do the kids usually do? They're pitching, they're swinging at the bat, they're swinging at the ball, swinging their bat everywhere before that ball is anywhere even near them. A lot of adults do this too. It's called the way that they trade. Don't be the 6-year-old in head to toe MLB uniform swinging at the pitch that's still 3 feet away. And that is our reminder to wait for the pitch to be over the plate, to think about where over the plate is our highest probability setup. And then we think about if and when this is our pitch. There's a lot of decisions we need to make. Being a trader is far more like being a big league hitter than just about any other analogy that I can think of. So I don't have the pitch yet, Kevin, but everything else is in place. Great question. Perfect for today. Thanks so much. Alex asks, good morning. I was curious how often I trade day trading window other than, how many other windows? Well, Alex, I'll even say within that 9:30 to 11:30 window, I also would say I like the 9:30 to 10:35 window the best within that 2-hour block. I have another window in the afternoon. We have our Asian session window. We have our European UK session window, which I almost never am up for unless the cat decides it's time for me to be up. And we have our pre-market window. So in order of my preference, I like the morning window. I like the pre-market window. I like I would have to say it's a toss-up between the Asian session and the PM window in the US. It's probably a toss-up. But my 2 favorites are going to be the morning and the pre-market. So we have 5 windows. We have 5 windows that I look at. Thanks for the question. All right, next up is SPY. Sure. So SPY means, Nancy, we're going to look at the ES. Remember, It's not a matter of right or wrong. It's a matter of complete and incomplete. SPY is a 9:30 to 4 p.m. window, while ES is, well, nearly 24 hours. It breaks for 15 minutes. It breaks then for another hour, and that's it. It takes a total break of 75 minutes, and the rest of the time it's reflecting risk appetite throughout, well, the world. So it's a much more complete view of risk appetite or risk aversion. That's why I will look at ES. Even before I trade financials, tech, healthcare, even before I trade any of the stocks within the ES or ETF alternatives like the SPY. What do I want to do with the S&P? Well, as a day trader, I'll wait in 20 minutes. I get the bell. I'll get a pretty good idea of what, if anything, I can do as a day trader, day trading SPY options. I'm going to be minorly bullish, but really, when I look at the 5-minute S&P, I think I'm going to probably go into the open slightly, and I mean minuscule, slightly bullish, but mostly neutral, which neutral markets are great for day trading. So that's the neutral intraday. And then end of day, gang, I still have to say this. I know the markets have rallied. I know there's probably a number of reasons to consider, say, the S&P at sort of the foothills of climbing the mountain now. I do not look at it this way. To me, this is a plateau. And until I get the confirmation of a bullish trend where my trade flag goes green or the lower row of my multi-trend goes green, this is a neutral market that is overbought. That's the way I'm going to have to view it until I have clarity that either tells me don't do anything, which is perfectly fine, or we turn into a trend, in which case buy the dip starts becoming the more logical choice. Now, remember, if we're interested in the S&P, Nancy, also consider XLK, XLF, XLV, and the stocks within those sectors, because those are the sectors weighted within the broader index. And that's the sector not so secret, right? We call the mastery sector secret, but it's not really a secret at all. Embracing high concentration weighting across all time frames and time horizons, understanding the weighting that sectors have within the indices and stocks have within the sectors. So you have a very effective way of understanding the way in which high concentration weighting affects all markets and really puts watch lists together for us, accurately reflects risk appetite, risk aversion, and relative under and relative out performance, because Wall Street has curated the stocks that they say belong together, that they will move in unison, oftentimes very much in unison. That's what ETFs and indices at a high concentration weighting are. By the way, what does that even mean? That means very few number of stocks have a disproportionate weighting within that index or within that sector. And by the way, gang, NASDAQ, S&P, Dow, all really high concentration weighted indices. And most of the sectors that are heavily weighted within the indices are also ridiculously high concentration weighted as well. Intraday, I am going to wait and see, neutral. Nancy, I'll see what setup I get. Overbought, oversold, HPMR red zone or green zone, overbought stochastic, oversold stochastic. But end of day, I'm still looking for some fatigue and just for the price to re-enter the range. I'm not calling for targets. Gang, realize what clickbait analysis calling for targets is. It's really just a terrible thing that I see permeate this world of ours, this trading world of ours. I don't know where the markets are going to go. And then for some yahoo to come out and say, oh, we're going to 3,400 or whatever, it's meaningless. All we can say is, where are we now? And what does that mean to me? Does it mean I'm going to get short? Does it mean I'm going to get long? Does it mean I'm just going to stay out of the fray? All of those are logical trading conversations, not, oh, we're going to 37. I mean, I don't have a DeLorean with a flux capacitor, right? No way for me to know what's coming around the bend. We react to what we have. That's what traders do. We're world-class counterpunchers, right? All right, Nick, why does the VIX move in uptrends and downtrends instead of being more erratic? Why does the VIX move in uptrends and downtrends instead of being more erratic? I don't quite follow. Why does it move in uptrends and downtrends? sorry, my friend. I know so much is lost within text. I don't understand that first part at all. Why did the VX candle jump up yesterday while being negative? All right. So I don't really like to look at VIX or VXX or any of the other VX types. I like looking at the VX futures. So why did it jump up? It was oversold. This idea that there is a tool, a market internal, or some sort of index, right? Put calls or whatever, ticks, trends, whatever, that somehow lead or tell us that the market is overbought or oversold in a way that eclipses, in a way that supplants the market movement itself, is a weird thing that traders who love to look at market internals to describe price action get wrong. If you want to know what's going on in a particular market, Nick, I look at the VIX, and it's a great question. Although I don't understand the first part, but the second part, why did it jump? It was oversold, my friend. It doesn't have to be that look, if we're moving higher on the VIX, I think a lot of people think, well, why isn't the equity market? Why aren't the equity markets down? That's that market internal thinking that I have never adopted. Everything does what it does for whatever reason, the numbers that are crunching it. For example, the VIX algorithm, which it is, and I'd say the skew algorithm are probably the most similar. They're measuring things for their world. The idea that somehow the VIX immediately translates to what's happening in the equity markets, I think is just not true. So I look at the VIX for what it's reflecting about itself, not outside itself. Does that make sense? I think a lot of folks are thinking, why was the VIX up? Equities were up. Why would the VIX rally if equities are strong? I think that's the wrong mentality to have about market internals. I know a lot of folks will ask me about put call ratios. I could care less. Put call ratios reflect a very specific algorithm about puts and calls, not about the greater market. And the other reason market internals are just absolutely going to always be measuring, bear with me here, I have no other way to say it, other than they're measuring the wrong thing, because market internals are not high concentration weighted. If the VIX or the tick or the trend were measuring the markets as they are composed, they would be high concentration weighted. They would put more weighting on sectors like XLK. They would put more weightings on stock like Apple. All 500 stocks in the S&P are not equal, yet market internals think they are. That's why they're wrong. That's why I don't believe in them, and that's why I don't use them. But if I do like to trade the VIX, but I trade the VIX for just being the VIX. I trade it for itself. I hope that makes sense. But yeah, Nick, if just kind of, I'm sure it's because the caffeine hasn't kicked in. Let me know how I can help you with the first part of your question. I'll be happy to do so. All right, let's see. Looks like GC. Hey there, Austin. Looks like GC found a temporary bottom. I won't look, Austin. So maybe depends on the time frame, right? So let's always remember part of analysis. We're all in the habit of throwing symbols out there, right? So let's start something which reflects, again, you all are dedicated to a show that starts 30 minutes before the bell. You are getting ready for the market. And I'll tell you what, even some pro traders aren't even doing what you're willing to do, which is prepare beforehand. You'd be surprised how few people just sort of belly up to the market at 9:30. So kudos to you all. The thing that I think a lot of traders, when we're all communicating about what we're looking at and thinking about the market based on what we see, hopefully not our guts, is symbol and time frame. And again, because you all are here in the market, I know that you get that, right? You're putting in the work. Clearly you get that. So my opinion on gold is going to change depending on what time frame I'm looking at. So the first thing is, are we putting in a bottom on the 5? Are we putting in a bottom on the weekly? That might be a little bit more applicable. We're at the 200 in a neutral environment on weekly gold. We're actually moving higher in an uptrend on the 5-minute chart on gold. But on the daily, I have a downtrend. I will not look to say there's any kind of bottom forming when I have a red over red downtrend. Yes, we might have a minor low pattern forming, but I won't call that a bottom. I won't call that a bottom. In fact, I don't even like to use the word bottom. We have a bottoming process potentially on the weekly. We have a bottoming process that's turned into an uptrend potentially on the 5. but I have none of those things on the daily. So depending on the time frame that we're talking about, I will not and cannot look at a daily and say that. But on the weekly, Austin, I'm with you. So I think part of what we all need to do as a really good habit is be really specific about, Rag, I'm looking at gold on the 5-minute, or Rag, I'm looking at gold on the weekly, because then that's not only going to give us an ability to share the view that we all have an opinion about, but also it helps with the time horizon. My weekly time horizon is going to be weeks, if not months. My 5-minute time horizon is just today. My daily time horizon might be days to weeks. And all those are very much, part of the conversation that we're having here each morning. So Austin, weekly, yes. 5-minute uptrend. Daily, I am simply not allowed to even utter the word bottom in that market structure. Okay, gang, and just like that 20 minutes has flown by. Great questions today. As always, I really do appreciate it. And I will see you all tomorrow, same time, same station. And have a great one. Remember, we do have a lot of volatility in this market right now. We have Federal Reserve next Wednesday, so that countdown has begun. All right, gang, be good to each other. I'll see you tomorrow.